Hey guys, welcome to another episode of Don't Get REKT. In this series, I'm going to do some trading on FTX, which I believe to be one of the most robust and well-run platforms for trading crypto. And we'll talk a little bit about how it's done, the processes, and what you need to know if you do want to go down the road of trying your luck at trading crypto, either on a spot basis, a leveraged basis, however your trading appetite delivers in terms of tools. So in this video, I am doubling up on Matic. So essentially what that means is I've taken, I believe, a $10,000 position long on Matic. So I bought $10,000 worth of Matic. And what you're looking at here is my screen. Now I have the Matic perpetuals open as well as the Bitcoin perpetual. And the reason I do this is that you need to understand that every crypto, every altcoin trades against Bitcoin. So when you're looking on exchanges, you're seeing that a lot of the crypto pairs are, yes, against the US dollar, oftentimes, or euro, but you're also seeing it the majority of the time against Bitcoin. So one of the mechanics of that, when Bitcoin goes up, then because it's the base pair, the value of the altcoin that's linked to it will also go up. And the converse is also the case. So the biggest problem with trading in general, and certainly trading in crypto, is the noise. You want to eliminate the noise at all possible if you can, because really that can close you out, especially if you're going in at high leverage. So in this situation, I've entered a trade, and this is for one of my European partners at 100x. So a 1% move, well, actually a 0.6%, which is about one half of 1% move, will start the liquidation process. So any kind of noise being pips up and down that are disadvantageous to you can close you out. And, you only lose the $100, but at the same time, if that's happening again and again, which it will because there's so much noise or movements, then you're going to have a hard time earning a return on your money. You're in effect going to be losing quite a bit of money. And I think it's important to point out that with contracts for difference, Forex, crypto trading, the vast majority of people, 80% plus that I've seen, will lose money. So whether it's because of lack of information, whether they went too big on a trade, there are a whole host of reasons why someone might have lost money on a trade. But what it ultimately comes down to is it's hard. If it was easy to trade and someone could even get a 1% advantage, because this happens on a minute by minute basis and the sizes are so big and the leverage is so big, you could very quickly become the richest person alive. And there are people that have amassed incredible fortunes using leverage, like George Soros, in shorting the British pound, or all these cases where you're using that huge leverage to take a small amount of money and then materialize it into something transformatively huge. The vast majority of the time is you're going to make mistakes. If you look at some of the best hedge fund managers on Amazon, you'll see that they all have horror stories of losing their clients millions of dollars. And it certainly hurts if it's your own money. But if you're borrowing or managing, I should say, someone else's money, and you lose them even $1, that's a call you have to make. You have to sit in a meeting and then get chewed out. So it's tough. And a lot of the pips up and down are difficult to predict. It could be that someone opened a Bitcoin wallet after 10 years and they're like, oh my gosh. And I saw this in the story the other day. I have 55 Bitcoin that I'd forgotten about that I mined on my computer. Let me send that over to Coinbase and liquidate that. And, that many Bitcoins sold at the exact same time could have a penny, 2 penny, even more of a difference, because the trading volume isn't billions, but that's over the course of the day. So if you slam it, you could have a philosophy that Phantom, for example, is going to go long. And if a whole bunch of Bitcoin gets sold, or there's some macro event and you're long Phantom, then through no fault of your own, you could be closed out of that position, not because your thesis on Phantom was incorrect, but because Bitcoin had a major macro event and that it adversely affected your altcoin. So what you want to do with these is really keep an eye on Bitcoin. The correlation between Bitcoin and Ethereum is less causal these days, and it's starting to kind of go away, whereas it used to be in lockstep. I remember for the longest time, I would short Ethereum and long Bitcoin because the funding rate was so high on Ethereum that the difference between, a 10 APR and a 20 APR, what you're earning in the difference can buffer any sort of moves against you. But that's less the case right now, especially with Bitcoin under 50,000. You're seeing more and more of a thirst there than even Ethereum on a lot of markets. And plus, with Ethereum, it's much more accessible nowadays. Whereas, Bitcoin, you could get futures coverage on contracts for difference platforms, Forex, the general market, grayscale ETF. There are all sorts of places to get it. And Ethereum, less so, but now increasingly more so. So, now there's all sorts of coverage. You can even get a classic or Ethereum classic coverage and all these small altcoins. And that will affect the price that someone's willing to pay. If they can get it for next to nothing on the public market, why are they going to pay you 100% a year in terms of the bid ask market on the futures on FTX to do that? So what it comes down to here is if you want to take a long position and you're bullish on Matic, you can do one of two things. One, you can go, as I'm doing in this situation, go long the Matic itself and keep an eye on Bitcoin. What is Bitcoin doing? Is Bitcoin going down and Matic is going up? That's a very bullish sign. That's really good. That shows that in spite of the downward pressure that Bitcoin is putting on Matic, you're still getting some buying activity. Or is it working in lockstep with Bitcoin? That's like, okay, it's just along for the ride and maybe the volume isn't that big. Or conversely, is Bitcoin going up and Matic is stalling out? So if Matic is flat, well, Bitcoin's going way up. That means there's a fair amount of sell orders. And you can look at the order book activity. And on FTX, there's enough representative volume that I guess there could be something crazy going on Binance or another platform where there's a lot of sales. But what you're seeing on FTX is pretty representative. They have what's called an algorithmic bot that's built into the FTX platform, so that if you want to have a particular strategy carried out, you don't need to use 2Commas or any of the other third-party bots. One's built into the platform, which I think is great because it brings more people to the platform. It gets familiar with algo trading, as it's called, algorithmic trading, and it makes you more of a savvy trader. So if you're learning on FTX, then you're more likely just to stay with FTX. Really, another exchange will come up. And the only reason I might go to another exchange is to say, are the features so amazing and the representation and the customer support and KYC is so beyond reproach and the reviews are so good that I'm willing to take away capital from FTX, which I've had such a good experience with for so long? And if the answer to that question is yes, then that's a problem for FTX. So I think that for the longest time, you had platforms that were playing around with offering this bot coverage. So FTX just went ahead and put a bot in there, and it made it a lot easier for individual users. The guide is pretty simple. The commands, even if you're not a coder, are pretty straightforward. So it's something you can use and not have to have a huge learning curve in the process. So I'd recommend doing that. And I'll do another video on that in future days. So in this position, you can see that it's going up and down. When you open a position, especially at 100x, and it's not Ethereum or Bitcoin, then you're going to be paying, I believe it's 3% of 1% in terms of the fee. So at 10,000, I think it's $3 or thereabouts. And then you have the spread. So when you're calculating the collateralization ratio, it's doing it on the bid price. So you bought it at the ask price, unless you did the limit order. And so you're going to be going from 100% collateralization, or like 1%, is a lot of them open up at for the max you can open it for. And it jumps it to 95 or 0.95 or 0.9. And so you're essentially in the hole a little bit. And you have to factor that in. That's one of the reasons why people will do the 20x. That, and you're not subject to the position limit, which is a factor when you're trying to borrow curve, or which in the case of Doge, I believe it takes whatever you're borrowing and then multiplies it by 50. So if you're borrowing $1,000 for the position limit, it's going to count it as 50,000. So essentially it's like you're borrowing $50,000 worth of Bitcoin. The risk profile is the same in the FTX's internal calculations as if you're borrowing $1,000 worth of Doge, because they have isolated that it's such a volatile crypto that they don't want to be put in a position where they have to cover the losses when it goes really low or goes in half, because Elon Musk did some sort of tweet where he tosses Dogecoin under the bus, like he did it on SNL. So that's their own internal metric. But I will say that FTX is pretty good about being able to liquidate at roughly the price that they say they're going to. So if you take a long position in something really volatile and you get closed out, then a lot of times it will just zero out. I've had a few circumstances where I went long and something just really moved aggressively away from me. And I did have a lingering negative $30, negative 15. And that only affects you if you're trying to withdraw something. So you will have to have that paid. And that's just something they have into the platform. I think that in that circumstance, it was so far beyond that they had to eat a loss on something. I think I was short on Doge, and then Elon Musk tweeted on it, and it like went 20% in a second or something. So that rarely happens, but it does happen. And you have to have an eye for that. But generally speaking, if you take a long position on something, or even a short, and it goes the other direction, once the collateralization ratio goes below 0.6, it'll start to look to liquidate. And what that means is it might sell half of your position in order to get it back to that 0.6 collateralization. And then from there, it's going to, keep the position open. So I've had times when I went long, like $2,000 worth of curve, and then curve took a nosedive a little bit, and it sold half to keep collateralization ratio where it needed to be. And then lo and behold, curve went up 12%. And when I checked it, I'm like, oh, I have the gains that I was looking for, but I see there's less of the curve that's here. And I looked in more in depth, and I was able to determine, okay, so half got sold, but in the process, it's still got a good amount of coverage to get some gains from the pop going upwards, the price igniting in some way. So I think that when you trade something like this, if you're confident that it's going to go up, but there may be some volatility, you're comfortable buying it again down the road, you might just want to go it long on itself, against the US dollar. Because I've had situations where I was long something and it was so fast, the drop and comeback, that it didn't even have a time to liquidate. So I think I was long Serum, which is the DEX for Solana. And it went from collateralization of 0.6, where sometimes I'll feed it along the way, to like -2. So it was it just took a nosedive. And SRM already has huge spreads. And during periods of volatility, you'll see that the maker or the market makers, they factor in that volatility, but they'll make the spread bigger because they know that during huge price movements, the likelihood that you're going to buy something is lower. So they need to make a profit. So the spread will be a quarter where it's usually like a penny. And in that situation, it's, went to nothing. And so I was like negative $100, let's say. But off of the initial collateralization of $100, it's like, well, you would think it would liquidate immediately, but if it's just for a few seconds, then it kept the position. So what happened in that case is it bounced. So it very quickly just took a huge nosedive and then rebounded right away. So I looked at my position and I still had 12,000 long. I'm like, okay, that was a close one. I almost got liquidated completely. And then it proceeded to go up and up and up. And so you will get those from time to time. There are people that'll do, or at least attempt, a little bit of an arbitrage where they'll go long and short the position at the same time. So they'll Bitcoin long and a Bitcoin short. And if Bitcoin absolutely ignites or completely crashes, you're able to keep the profitable side of it, and the side that isn't profitable will automatically close out. You have to be careful though, because it could whipsaw up and then all the way back. And when you're looking at something like this that is pretty volatile, that you have to expect the whiplash. So, what you're seeing here in the video is that it's going in the right direction. I'm noticing in the trades that Bitcoin has a short, or that it's moving in pretty lockstep. And in a few of the circumstances, if you're watching along, you'll see that Matic is blowing up in spite of Bitcoin going down, which if you're having thesis that it's going to outperform Bitcoin, then that's exactly what you want to see. You could avoid a lot of this if you went short Bitcoin and then long Matic. That gets a lot of the noise out of the way, but you have to be careful because you're also having to contend with, if Bitcoin makes a huge bump in the right direction, you're going to lose out on all of that profit. So if you're bullish on Bitcoin and super bullish on Matic, you could roll the dice and go ahead and just go long the Matic, as I am in this circumstance. I'm seeing that Matic had a pattern of exceeding the upward pressure that Bitcoin is putting on it. So I decided to go in that direction and keep going long for it. I think in this circumstance that I certainly did get lucky, and really anyone that's trying to double up at 100x is getting lucky. There are some people that will roll it over and can do really well, because if you double 3 times, you 8x. So it goes 1 to 2 to 4 to 8. What you have to understand with FTX too is there's a little bit of a settlement time where they'll hold a certain amount. I think it's like 10 minutes. So let's say you have $100 and then it goes to 200 and you close it out at that 200. You're not going to get all of it to be able to use immediately. It has a little bit of a settlement time, and for whatever reason, for the risk profiles, that's part of what the platform does. So you have to kind of sit, and I found it to be helpful because I'm able to go into my trading journal and just write down what I'm trying to do, what I want to do, and materializing that into something that is much more thoughtful than just jumping right into the market at a time that may not be good for the technicals. I'll do another video on Bollinger Bands and some of the other technical indicators that show that something is overbought or oversold. The randomness of that is such that I wouldn't rely solely on technical indicators. If anyone tells you to do that, I think is mistaken, because everyone has that information. Millions of traders understand technical analysis. And if there's an edge somewhere that someone would have exploited it already. However, if you're looking for an upper end or a bottom end, you're also in the mind of millions of other traders that are looking to say, oh, this is when this achieves 2 standard deviations, or this is when this hits the edge of the Bollinger Band. And if you know that's 3 pennies, and if you put your sell order at 4 pennies, then sometimes you're able to get that upward thrust. And that's valuable information. If you know that people are going to what's termed fat finger or put in or have the algorithmic bot at the end of the Bollinger Band go long, because you don't want to put it for 2 cents and then be closed out and see that everyone waited until it went down 3 cents and then it rocketed up because you would have lost a ton of money. So, in this economy, knowledge is everything. And if you're understanding what all these traders are thinking and try to get in their head to some degree, that's valuable. And what is this information economy other than being able to figure out psychology, gathering information? And that's the core essence of wealth nowadays. So when you trade, the more information, the better. The one caveat on that is that if you're too confident, that's bad. You may be so confident this is going to run until the end of the bracketed Bollinger Bands, let's say. You can look that up on Wikipedia. I'll do a video on that. And if it goes beyond that, which happens habitually, then you can be like, well, I was wrong there. But you don't want to be like, I am so sure that it's not going to exceed this range, and then bet the farm, long or short, that won't happen, because those events happen not on a daily basis, like on a minute by minute basis. And you don't want to get closed out, because the name of the game is staying in the game and being able to do strategic trades that benefit from the market holding together or falling apart. There's opportunities to profit from 3x short tokens or any number of ways that you can profit. So if you have any questions, reach out to me at @REKT on Twitter, or leave a comment in the video below. If you're on the podcast, remember to subscribe, and on YouTube, subscribe and notification bell. Of course, I'll be doing a lot more videos of these. And in the comments, go ahead and put down what coins that you want me to profile or start trading. I'm going to do a little bit more of that, and I'll figure out some fun airdrops for the communities. Thanks, guys.